Ladislas Maurice joins me here today. You can find what he is up to by heading over to thewanderinginvestor.com or find him on YouTube under the same name, The Wandering Investor.
How you doing, Jack?
Yeah, it's great to meet you. This should be fun because we're going to be talking about international investment strategies here today and some other benefits around this. So this really appreciate your time.
Thank you.
So can you share a bit about your journey that led you to become a full-time global traveler and the international investment strategist?
Sure. So, it all started in Canada. I graduated from business school there, and then I went to study law and business in Australia. And then I just did the whole corporate thing. So I joined Nestlé, the big food company, at their headquarters in Switzerland. And then they sent me to Africa for 7 years. So actually, I spent most of my 20s in Africa in operations with Nestle in South Africa and in Ghana, but traveling all over the continent. So that was really interesting, like learning how to manage a business in proper frontier markets. And at the age of 30, at that point, I was on the executive board of Nestle Ghana. I decided that I wanted a new challenge, new company, new region, 20s in Africa, good time to close that chapter and move on to something else. Initially, my plan was to move to Dubai. But before doing this, I wanted to just take a nice vacation. It turned out that my parents were retiring at the same time. So we decided to go on a road trip from Oman to Paris. So we drove from Oman to Dubai, put the car on a ferry. Then we traveled all across Iran, into Armenia, into Georgia, across Turkey, into Greece, up into Ukraine, and then to Paris. And it was the first time that I had two things going on at the same time. I had money because I had been making good money in Africa as an expat and I'd been good at saving and investments. And I had time. Usually, when you're young, you have time but no money. When you're old, it's the other way around. So I was young and I had a bunch of cash. So as we were driving around these places, and we were in no rush whatsoever. My parents were going into retirement, and whether the gap on my resume was 6 months or 8 months didn't really make much of a difference. So we were really taking our time and going through some of these countries. I'd go check out real estate, talk to some lawyers, some realtors. Like, wow, this is interesting. Like, I see opportunities here. So I started buying on the way, just doing flips. And I started one flip, then started doing another flip. Once the trip was over, I still had these projects going on. So I went back and then I never really got back to looking for a job. So now I've been doing this full time for almost a decade, just traveling around the world, managing my own money and doing investments mostly in emerging and frontier markets, a lot in real estate, but also some venture capital, stock markets. In some of these countries, stock markets are interesting as well. So some of my friends were like, you're posting all these pictures in super weird countries, but you don't really seem to have a job. Like, what do you do? So I was thinking about this. And then also when I was trying to research these markets, there's no information. These are very data poor countries, very kind of like in Africa when I was working for Nestle. It's not like doing business in the US or in Canada or in Western Europe where there's a lot of data. It's data rich. You have to be very analytical. In a lot of these frontier markets, you operate in a very data poor environment and you just have to like try, test, fail, go with your gut, just try to feel your way through business. So I started writing about this and started writing about just doing market analysis of these niche real estate markets all over the world. So been doing this, yeah, for almost a decade now.
Would you mind backing up for a second and kind of help some people understand what is an expat and what is the benefit of becoming one?
So an expat is an employee of a major company that gets sent overseas and gets a nice expat package. Let's say you're sitting in Texas and your oil company needs business development in Guyana. They'll send you to Guyana, give you danger allowance, pay everything, pay your housing, flights, private school for kids, the whole deal. You're sent on a mission by headquarters to a country for a few years and then you go back.
So why do you believe it is essential for investors to consider international real estate and add that to their portfolio?
Look, I'll put it this way. For most people, it's not essential. The question rather is feel a need for it. And at a certain level of net worth, it starts to make sense to not be all in a single jurisdiction. I think that's what it really comes down to. If you're dabbling with a few $100,000 here and there or $1 million, real estate in the US is the best place for you to be invested in. There's always a micro market in the US that's doing well. Even if most markets are crashing, there's always going to be some small town somewhere in the US that's actually seeing a boom because of a new mine, a new factory, something. And then as an American living in the US, you have access to easy leverage. It's also a higher trust environment. So it's easier to operate in these markets. It's easier to find an honest property manager in the Midwest than it is in Nigeria. And you understand the legal and regulatory environments as well. For most people, just stick to what you know. Now, when you start to want to venture overseas is when you want that diversification, when you feel that potentially the US, may or may not be heading in the right direction or a direction that you necessarily are comfortable with. When it was the Biden years, we saw a lot of Republicans that were starting to dip their toes into overseas real estate. Now it's the other way around. Now it's Democrats that are doing this just as a bit of a plan B, not being all in a jurisdiction. When you invest in international real estate, depending on where you invest, at times you can get some very interesting fringe benefits. Some countries will grant you residency if you buy real estate there. Panama is an interesting one. A lot of people are moving to Panama right now, a lot of Americans, Canadians too. You just invest $200,000 in real estate in Panama, and that'll give you residency for you and your whole family. And just to keep that residency active, you just need to go to Panama once every 2 years. So just by owning real estate there, just for 3 years, you can sell the real estate after 3 years and you'll still keep your residency for life. So just by shifting a bit of money from the US to another country, in some cases, just for a few years, you can then have a plan B for life for you and your family. So sure, the rental yields in Panama are not fantastic. When you'll see online people promising you 8-10% net yields. It's lies. You're looking more at like 3-4.5 net after expenses, pre-tax, around there. But you have that side benefit, which is potentially very valuable for you. Some countries will even give you citizenship. So they will give you an actual passport just for buying real estate. Turkey, for example, if you invest $400,000 in any real estate in Turkey on the open market, and real estate is pretty affordable. I mean, Istanbul is I know it makes a lot of negative headlines and this and that and blah, blah, and like geopolitical risk. And like we can go down the list of risks of Turkey. I mean, it's a long list. So one, be aware of the risks. Two, if you're comfortable with this, and as long as you position size accordingly, then Turkey for some people is really interesting because you just need to buy real estate for 400K, keep it for 3 years. That's it. Or 5 if you don't want to pay local capital gains. Within a year of buying, they'll give you, your spouse, and all your underage children citizenship, like an actual passport. And then whenever you have children in the future, or whenever your children have children in the future, as long as they register the newborns at the nearest Turkish consulate or embassy, they'll be Turkish too. So just by shifting $400,000 to Turkey for a few years in a safe asset class. I mean, we're not talking about Turkish lira term deposits. We're talking real estate. You are making a move that will increase your level of freedom, not just for you, but for all the generations down the line. This is like a generational move just for shifting 400K for a few years. So again, if you're worth $1 million, should you shift 400K into Turkey? No. But if you start being worth a few $1 million, why not? Like, why would you not do this? It's such an interesting move. Then your children have access to that part of the world, your future generations. And who knows what the world will look like in 100 years from now? It's insane. Multiply this by 20, try to look at what your great grandchildren will be going through. Will they at some point be happy to have a Turkish passport? Maybe. I mean, there's very little downside to it, especially if they're not there. So that's those are the sorts of discussions that we have with clients is what are you really looking for?
Mm. Early on, you mentioned that you started in flipping houses as you were kind of traveling the countryside. Is that strategy changed today? It almost sounds like you might be dealing more with rental property.
More rental properties. Yeah. I did quite a few in Montenegro. Yeah, Montenegro, I operated a lot of flips. And other markets I've been dealing more with rentals and longer term investments.
So you mentioned it can sometimes be difficult finding trustworthy property managers. Is that something that people need to be aware of? And if so, what has changed there to make sure you find the proper help?
Yeah, I mean, that's a good question. Look, one of the biggest risks for Americans going overseas is it's changing gradually, but it was a very high trust culture. I mean, I remember when I was a kid, going into small towns in Vermont after church, like people would just invite us over to their homes and tell us, hey, you can stay overnight. And like the
Mhm.
doors didn't have locks. I mean, that's just incredible for 99% of the world. So things have changed and have evolved. But the reality is, if you go into the rest of the world, most of the world, go into Africa and many parts of the Middle East, a lot of Eastern Europe, Latin America, definitely, they are generally speaking lower trust cultures. And why are they lower trust cultures? Because people have a higher propensity to screw each other over and to be dishonest. So yeah, that's one of the biggest risks as an American venturing overseas is just trusting people too much. So how do you mitigate this? One, you always hire competent lawyers in any real estate transaction. Don't hire if you're going to a country where it's your girlfriend's already from or your wife or I don't know, whatever. Don't go with the uncle. Just hire a good law firm. We work with a lot of competent lawyers, but you can also just go onto the local website of the local U.S. embassy, and they typically have a list of like law firms, and they'll be a bit more expensive, but you'll be safe. So, if you follow basic protocol like this, you'll make sure that your transaction is safe. That's the most important thing. And then property management. Look, you ask around, eventually you'll find someone. There are bigger companies that are more honest, but not always. And just make sure that you always have a backup plan. And if your property manager is starting to be a little iffy, just fire him fast. So whenever I have property anywhere, I always have my main property manager, but then I already know who my backup is. So that if the main guy starts playing around, I can fire him in 2 seconds.
Mhm.
So just having these mitigation strategies in place, and you'll avoid 99% of problems. Because I know sometimes you watch TV like Fox News or something. They'd be like, oh, Jonathan went to Mexico and bought land, and then it turned out that he never owned it. And yeah, like Jonathan didn't use a lawyer. Jonathan used his girlfriend's cousin. And yeah,
Yeah.
he didn't actually buy anything. He bought like the other lot, not the one he wanted. But if Jonathan had done basic due diligence, Jonathan would be fine. So people shouldn't be overly worried about buying overseas. I bought in like pretty high risk environments, like in West African countries, just a few years after a major civil war and stuff. I've never had like title deed issues.
Hmm.
Sometimes it can be very slow, right? So it's not like the US where you do a transaction and within a few weeks, you got your title deed and this and that. Sometimes you can wait like, I don't know, 2 years for a title deed. But markets like that are typically very low liquidity as well. So yeah, people just need to be aware of what they're getting themselves into. There's some fantastic opportunities, but they come with a number of disclaimers. I'll put it this way.
Mhm. And just to remind everybody, if you want to learn more about this, I'd head over to the website, thewanderinginvestor.com. I'm going to have that as a clickable link in the show notes. Also, check out the YouTube channel where you're going to find some great information. And if you're watching us on YouTube, give us a quick like and subscribe. When it comes to your rental properties, is it more like Airbnb or is it more long-term rentals?
It really depends. So, look, the way I operate is in my mind, I have a map of the world. I see countries or markets that have some interesting macro phenomenons going on, right? So I'll give you an example. 2019, I liked Uzbekistan because the country was just emerging from a communist dictatorship. A new president had been appointed, and he was rolling out the red carpet for foreign investors, and everyone wanted a piece of the pie. So, the Russians are traditionally very involved in Uzbekistan, the Chinese as well with their Belt and Road Initiative, Turkey because Uzbekistan is a Turkic country, India as well, and then all the Gulf Arabs were investing massively as well because it's a Muslim country, and the U.S. and Europe also just were looking around. So I took a flight there. My idea was to buy an apartment and fine with it. How do I play this growth story?
I'm sorry to interrupt you, but we're going to have to start where you're going to buy an apartment and then you pause there. I think the internet froze there for a bit. So would you mind starting from that
Yeah,
spot again?
you move. Okay. I was considering buying an apartment downtown in Tashkent, the capital city, but buying was fine as a non-resident. The issue was renting it out as a non-resident. Technically, it was illegal. Some people were doing it, but I just didn't feel it. I don't mind operating in the gray zone, but this particular gray zone, I was not comfortable with. So I decided to look for other opportunities. So I was just sniffing around. And then I came across the local stock market in Uzbekistan. That's pretty niche. And I just started, speak a bit of Russian. So I worked in Russia before, and I started just going through these companies. And some of these companies are like P ratios of 3 with zero debt, growing at like 30-40% a year, with dividend yields of like 15-20%. I was like, what? This is ridiculous. So I bought a bunch of stocks. So I went there thinking I'd buy an apartment, but I left with a brokerage account. So I'm always open to what the opportunity will be. Sometimes there's no real way to play it. I was in Serbia a few years ago because you could sense like tension was rising in the world, and Serbia is between East and West. It's the only country in the heart of Europe that's between the European Union and the Russians and the Chinese. So there's just a lot of investment, a lot of things happening there. I went there, and the stock market, you couldn't really play it because if you sell your stocks, you have to like manually declare capital gains taxes. Then you can take your money out only like 8 months later.
Mm.
So that was just a bit too ridiculous. And there's zero liquidity. And the real estate market was a bit expensive already. So I just looked around. I didn't really want to buy government bonds. So I didn't pull the trigger. I didn't find enough value. Turns out I was wrong. Real estate prices from high valuations pretty much doubled, especially following the Russia-Ukraine war, because a lot of Russians and Ukrainians moved to Serbia. At that point in time, with the information I had, it didn't quite make sense. So it's really looking at the macro perspective, going on the ground, spending time, and trying to understand, how do I play this story? And sometimes it's real estate. It can be a long-term play. Sometimes it can be Airbnb. Sometimes it can be midterm rentals. Sometimes it's a flip. Sometimes it's just like renovation and flip. Sometimes it's buying off plan and then selling. I'm open. I'm very agnostic.
What are some of the common misconceptions somebody you run into when it comes to investing in international markets?
So I think the main one was the risk of losing all your money. If you follow just basic proper protocol and do basic due diligence with a lawyer, you'll be fine. And I think another misconception that North Americans typically struggle with is the fact that as soon as you venture overseas, you don't get access to leverage. Like you can't just show up in Colombia and expect to get a mortgage or anywhere really. So they're cash markets. Generally speaking, when you're a non-resident, you can get some developer financing, which is kind of like, seller financing. But in the vast majority of cases, it's a cash market. So, don't bother contacting a bunch of realtors saying, hey, I want to get a mortgage. When you can in some countries like Spain and, you know, to some extent you can in Spain, the rates are going to be a lot higher for you as a non-resident versus locals. And then it just doesn't make sense. But then again, that's also one of the advantages because like the market in the US is very levered up. Real estate in the US is not just let me put it this way. The price of real estate isn't 100% linked to the intrinsic value of the real estate. You think you own real estate. In reality, you own, sure, real estate, but a whole bunch of exposure to financial leverage and to just leverage in general. So if rates go up significantly for a long time, watch the price of your real estate go down because real estate in Western countries, whether that be the US, Canada, or Western Europe, is part hard asset, part financial asset. And this is important for people to understand. So when you're in a cycle where rates are low, the part financial asset is with you and it, takes you on a wild ride and it's a great party. But when this reverses and the financial asset becomes a net negative, then you're left there with what you thought was a hard asset. When you go into markets that do not have leverage, you're actually buying a hard asset. So most markets I'm involved in, they're hard asset markets. They don't fluctuate as much. They're also less liquid because there's less bank lending, et cetera. So it takes longer to sell, which is also something that North Americans typically fail to understand. They don't understand that when they're in Colombia, they're not going to sell their condo in like 2 weeks. It's not Los Angeles, but you have a real hard asset. There's more intrinsic value in that apartment that you bought because it's not tied to interest rates because interest rates are typically high there and banks don't lend. So in many ways, it's for a lot of these markets, it's more of a deep value play. Potential side benefits such as citizenship, such as residency, and also exposure to another currency.
I'd like you to talk a little bit about what maybe it's just me and I'm the only one who has heard of this or seen this because I've had other people on, Panama and a few others that invest in those particular areas. And they refer to plan B as the fact that as people grow older, they're looking for a retirement area. Is that one of the things that you've seen as well, where that's the plan B for them, is that they're just trying to find a less expensive place to live or to
Yeah.
land in their retirement?
I mean, that's not really a plan B anymore. That's preparing for your plan A, right? My plan A is to, say you're sitting there in Houston and, you have another 5 years to go. Your plan A is at the age of 63, I'm moving to Panama because, it's warm, it's more affordable than the US, and healthcare is a lot more affordable. So, yeah, sure. A lot of American retirees are moving to Europe or moving to Latin America. Some cases, the adventurous ones, we help move to Asia as well. And healthcare is the main benefit for sure.
You seem to be, well, your name says it all, the wandering investor. How frequently are you moving to the next place?
Oh, so my daughter in her first year, who travels only part-time with me, took 25 flights.
Wow. You don't stay put very long, do you? So, could you talk a little bit about what listeners should be taking away from this? Like, especially when it comes to diversifying their investments, if they're considering their first international investment, where they should start?
They should start by being clear with their objectives. Are they looking for a pure investment? Are they looking for side benefits such as citizenship or residency? Plan B. Are they looking for geopolitical diversification? Are they looking for lifestyle? I mean, you can buy lifestyle property and then the rest of the year you put it on Airbnb and it covers your costs and a little more. Fine. So that is the biggest thing that people need to really remember. Be clear with your objectives and be careful when you come across people that try to tell you that, oh, you can invest in Panama and make like 10% net yields. Making money in overseas real estate is harder than making money in US real estate.
Well, could you talk? I think one of the apprehensions people would have is any kind of geopolitical events or different structures going into these markets, just some uncertainty. What have you, maybe this is just a misconception on my part.
Look at the US. I mean, you're talking about other countries having uncertainty. Look at the US. Look at uncertainty there.
What are you referring to?
your politics. I mean, it's going from, all over the show, from left to right to this to that to, I mean, if you're worried about instability and risk, I mean, just look at the US. I mean, it's not very stable from a political point of view. So sure, there's risk in other countries, absolutely, a different type of risk, but don't believe that the country, you're in is, risk-free. There is risk. Empires rise and fall. And on their way down, you start to see a few symptoms, and we're starting to see a few of the symptoms in the US. And I'm not trying to take sides like whatever, Democrat, Republican, really. I'm not in that business. I'm not American, but there are signs that the US is becoming less stable.
Hmm. Well, I really appreciate your time here. This has been really interesting. I'm going to direct everybody to your website again. It's the
If I may,
Wandering. Yeah.
and even though I said this, I'm still saying it's still one of the better places to invest.
No, one of the things that I think is just strikes me, and what gave me pause there for a second, was because the way you spoke of that, I hear the type of enthusiasm, or not, maybe that's not the way to describe it. I hear that regarding people having a 9 to 5 job where your job isn't as stable as you think it is. You know
Yeah.
what I mean? You were saying it with the same vigor as people who talk about their jobs. So, well, I really appreciate this. TheWanderingInvestor.com. I'm going to have that as a link in the show notes, and I'm going to make sure you hit the YouTube channel. I know that there's a lot of great content there. I just can't get my mind wrapped around that you travel this much. I mean, the amount of different cultures is just stunning to me.
My kids have a lot of passports, and yeah, they're learning a bunch of languages at the same time, and they're learning to navigate in a very ambiguous and ever-changing world.
Mhm.
It comes with positives, it comes with negatives.
So how many languages do you speak?
5.
Did you speak those languages before you started all of this, or is this something that you've just kind of?
I spoke 4 before I started all of this, and I learned Spanish recently.
Okay. Well, just it's really interesting, and I really appreciate your time. Before we dive into the rapid fire questions and close out this episode, is there anything else we should have tried to hit on?
No, all good.
Okay. Well, if you're ready, we'll close out this episode with a few last minute questions here. What lie do real estate investors often tell themselves?
Gosh, that's a good question.
If you could go back in time and give your younger self a piece of advice, what would it be?
Be more patient.
Do you have a book recommendation?
A strong book recommendation is the Gulag Archipelago by Solzhenitsyn, a Russian philosopher, talking about the Soviet gulags and all the crimes that happened there.
And then finally, what single strategy, process, or tool have you implemented that has had the biggest time saving impact?
Not very efficient. I think that a result of being in a lot of emerging markets where all these tools and tricks just stop working, because a lot of these countries are very heavily relationship based. So I could come up with a few things here and there, but the lesson from this question is, in a lot of these markets, forget about these productivity tools, because you'll be dealing with different problems.
Well, I really appreciate your time. This was fascinating. Again, it is thewanderinginvestor.com. I hope you consider coming back again sometime. This was just fantastic. It was great to meet you.